How can the right cash flow management system and the right way you structure your bank accounts, how can that actually help you retire sooner and with more confidence? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. What's your cash flow operating system? Do you even have one? Do you run a budget? Do you have a structure for how you set up your bank accounts and what their purpose is? Well, it might not be flashy. I call this the blocking and tackling of your financial life. It doesn't appear that it helps you win games, but it actually not just helps you win games, it helps you win championships, or dropping the analogy, helps you really have a lot of success in other areas of your financial life. We call it the 3 bank account system, okay? And it's more than just a budget. It's more than just an emergency fund. It's an operating system for your cash flow. And when done correctly, and guys, it takes time, takes lots of practice, takes nuancing it for your specific situation. But once you've got it set up, it really allows you, it provides a foundation to your finances so that it allows you to go on and reach your financial goals, especially your long-term goals like retirement, even faster and with more confidence. So very briefly, this 3 bank account system is 3 different bank accounts. Although for me, this middle bank account is several, and I'll explain why. The first bank account you already have, and it just needs to function appropriately. So this is your checking account, or it's your immediate spending, and that is where you're tracking all the income that's coming in, your net take-home pay, all that sort of stuff. So all the income that's coming in on a monthly basis, and then all your normal monthly expenses. And you might call this a budget, and that's fine. But basically having visibility that here's how much money's coming in, here's how much is coming out. Therefore, I know how much discretionary money we have or cash flow that we can use towards goal achievement. Some of these monthly expenses are fixed amounts. You know the exact amount every single month, and those are easy to budget for. These are your mortgage or your rent, your Netflix, anything that's going to show up every single month and is the exact amount. But then a lot of monthly expenses are going to show up every month, but the amount varies. It's different. It's up to you. Grocery expenses, utilities, going out to eat, going shopping, those sorts of things. You're going to do those every single month. So they're monthly expenses. They belong in that immediate spending category, but you've got to manage, well, how much is it going to cost? Therefore, how much do we need to plan ahead for it? So that's immediate spending. Okay, that's your checking account. Jumping over to the third bucket, that's your emergency fund. Well, if something happens or occurs outside of that normal monthly rhythm, right, that you can manage well in that checking account, if something catches you off guard, is it going to wreck your financial life, or do you have resources that you can draw upon to help manage that financial emergency? That's the emergency fund, okay? And even though financial emergencies come around very, very infrequently, we still call that an emergency fund. I prefer to call it a financial confidence account because it's going to give you confidence every single day of the year, and it's only going to be there for emergencies which happen very, very infrequently. So that financial confidence account, that emergency fund, typically is a high yield money market account. It's fully liquid and FDIC insured and has no cost to it, but you're earning a decent interest rate because the money that you put in there hopefully is equal to 3 to 6 months of what that immediate spending bucket it was. 3 to 6 months of your living expenses. That's a rule of thumb. Work with your CFP to figure out what's best for you. That, hopefully, you're not needing to touch that often. It's a decent chunk of money. It could feel like lazy dollars, but they're there to not make you rich, to keep you from going poor, and are earning a decent interest rate. Well, tucked in between there is that second bank account. We call it delayed spending. For me, it's actually multiple bank accounts, but the purpose all fits in one category, and that is it's not a monthly expense and it's not an emergency. So what that means is it's an expense I can anticipate. I know it's going to come up. Maybe it comes up at the same time every single year, or maybe not at the same time, but I can fairly confidently anticipate this is going to happen, but it's not a monthly expense, and I should be able to plan ahead. It's not an emergency. These are things like, well, Christmas, right? Or gifts. These are things like vacations. These are things like deductibles or car repairs. It could be things like a down payment on a house or buying a new car. Those sorts of things. I can anticipate it. I need to change my tires every 4 years or so on my vehicle. So it's not an emergency, but it doesn't show up every single month. And therefore, this delayed spending, this second category, is where you identify what those things are in your life. We've got a list of about 19 of them that apply to anyone based on their situation. You tally up, how much do I need to save up, or how much is this going to cost me? And then divide that by 52 and save that amount every single week. Or divide that by 12 and save that amount into this second bucket every single month. And then when those expenses show up, you've got some money, you've got the money set aside. It doesn't become an emergency where you raid your emergency fund, and it doesn't wreck your cash flow because you weren't anticipating for it, because it's not a monthly expense. A lot of times people just have one delayed spending account. It all goes in there. However, it's best to compartmentalize this. And that might mean you can do all that in one account. Some banks allow you to kind of split that up and turn it into several buckets. Where I bank, or just how I set this up decades ago, I have multiple bank accounts, one for vacations, one for car repairs, one for home improvements, those sorts of things. So that's the structure. That's the 3 bank account system. Are you using anything like that? But then here's the added question. How does that is squarely in present financial position, how you manage your cash flow. That's one of the 6 areas of your financial life, present financial position. How can that help you with your biggest financial goal, and that is retirement? Are they disconnected? Well, guys, comprehensive financial planning, looking at all 6 areas of your financial life, is all about taking these seemingly disconnected parts of your finances and showing how they're actually connected and how you can leverage one to improve the other. So yes, having a 3 bank account system, or having the right operating system for your cash flow, without a doubt helps you retire. The first is, when you have this 3 bank account system set up and you have this clarity, you have confidence that, yep, I'm ready for all of my normal monthly expenses, the fixed ones and the variable ones. I'm ready for everything that I can see on the horizon. Every expense that's coming up over the next year or so that I can anticipate, I'm saving money ahead. Therefore, when those things come up, I'm not taking 2 steps backwards. And then if there's something that comes out of left field that I couldn't anticipate financially, I've got the money there to help cover that as well. When you have that set up, you can save aggressively for your goals. When you don't have that set up, oftentimes saving up for your retirement, maybe your 401k or your Roth IRA, it feels like, okay, I'm saving 10%. Uh-oh, something happens, I need to save less. Uh-oh, I can't fund the Roth IRA this year because we had this thing come up. And some things financially you just can't fully anticipate. But when you have this structure set up, you can save aggressively towards your retirement goals, often without interruption, because you've got a cash flow system that allows you to manage the predictable and the unpredictable as well. Because of that, the second reason, it means you often don't need to raid your savings when an emergency comes up. Saw this a lot during COVID. I don't want to overuse that time period because it was such a unique and extreme example, but so many people needed to find a way to get access to money because they didn't have an emergency fund set up. And yes, this was extreme, very, very, very unique, but people in droves were finding, how can I draw money out of my 401k? How can I draw money out of my Roth IRAs? Can I take my basis out? Those sorts of things. And that's going to make it hard for you to stay on track with your retirement goals. When you've got this structure set up, there's going to be fewer reasons that you need to that you'd feel the need to raid your savings, but then you've got an emergency fund, a financial confidence account that you can use instead of needing to stick your hand in the cookie jar and borrow or pull money out of your retirement accounts early. And then the final way, or a third way, that having the right bank account structure, the right operating system for your cash flow helps you retire, is it helps you have eyes on exactly what you are spending, what your lifestyle is. Not that there should be any value judgments on, well, I go out to eat all the time, or I never go out to eat, whatever fits for you. But when you're planning to retire, there's 5 factors that determine whether you're on track or what you need to do to be on track for your goals. One of those factors is spending. How much are you going to spend? And having awareness, having a system for managing your expenses today not only gives you the clarity for, well, then how much will I spend in retirement, but it also, having this system helps you have more structure to your spending and therefore have a more confident retirement, so that when you get there, you've got this operating system that's functioning in retirement and you will have less whipsawing where, oh, I need to pull extra money out of my IRA and pay extra taxes here or whatever. It's all set up, and you've got a lot of confidence for how you're managing your cash flow that will help you in retirement as well. So do you have a 3 bank account system set up? Are you working this operating system in your financial life? Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.